Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, independent financial advisor and owner of Elevation Financial. I'm on the web at elevationfinancial.com. Thanks for joining me today. That is a question that some are asking, more and more people are asking as interest in digital assets grows more and more every day. And so we're going to talk about that today. Note that I am saying cryptocurrency, which is kind of the more commonly used name for this. Really, I think of it as a digital asset, but I'm using cryptocurrency because that's really what people say. It's just kind of the normal language people use. So be aware that if I use cryptocurrency or digital asset, they're interchangeable. They are basically describing the same thing, things like Bitcoin, Ethereum, et cetera. So that is what we're talking about today, how to invest in cryptocurrency. So note that I am not going to get into if you should invest in crypto or not. That's beyond the scope of this episode and really this podcast. That's a more personal conversation to have. So this is not going to be about, whether it's a good idea or, the philosophies or thesis behind it. None of that today. It's really about the logistics and some of the paths and options to take when it comes to investing, some of the logistics of just how to do it. If you were interested, how it would be done. So I'm not going to get in too much into what is crypto or what is digital assets as well, because there are other episodes we've talked about that. There's plenty of resources out there, but just a quick summarizing kind of foundational statement. Crypto is a digital or virtual currency or asset secured by cryptography, which makes it, in theory, impossible to counterfeit or double spend. It kind of protects the integrity of the asset. And, many are decentralized networks based on blockchain technology, which is a distributed ledger, which is enforced by a network of computers. So one of the defining features of crypto is that they're generally not issued by a central authority. They're theoretically immune to government interference or manipulation. So some of the attributes of crypto. Tyrone, hey, welcome. I'm going to say hello to Tyrone, who's stopping by to say hi. Tyrone is on LinkedIn. So if you're listening after the fact, in case you weren't aware, I broadcast this live on Facebook, LinkedIn, Twitter, and YouTube Live when I record these episodes. So you might hear people stopping by or saying hello or posting comments or questions. So thanks, Tyrone. Appreciate you being here. All right. So let's talk about the hows behind it. And first of all, I like to kind of mention crypto has some similarities, in my opinion, to gold. Some might agree with this, some might not. But in general, I feel like crypto has some similarities. If you think about gold, gold is an asset class. People can invest in gold. You can invest in gold in different ways. You can invest in gold by literally holding gold in your possession. You can have gold bars, gold coins. You can have gold in your house that you keep in a safe or under your mattress or whatever. Like, you can hold gold in a physical context. You can also invest in gold in funds. There are funds out there that invest in gold and precious metals, and they track the price exposure of the asset. And you don't have to hold it directly. You invest in the fund that holds the asset. Gold inherently, it's arguable whether it is useful from a utilitarian standpoint. Gold can be used for certain things, but in general, a lot of people would say, well, gold has value because we as a society have decided it has value. It's a scarce resource. We think it has value. There's momentum and agreement behind it. Therefore, it has value. Some would argue there's some similarities to crypto. There are some utility or use cases for the utility of the technology behind crypto. Others would say, it's got enough momentum behind it from a theoretical agreement as a society that it has value, therefore it has value. So there's a lot of nuances into there, a lot of room for hours of discussion on that point alone. But I do see there are some parallels and some similarities to how we behave around gold as crypto. So anyway, not to get sidetracked on gold, but that's kind of a foundational kind of starting point for crypto. So methods for investing in crypto. There are multiple ways to get into this space and to invest in crypto. And again, I'm not going to go anywhere near saying, whether these are right or wrong or what's best for you. This is a public podcast. I need to have a personal conversation individually if we're going to go deeper into this. But these are more of the logistical options for you to consider if you're interested. So there's a few different options. One is with a custodian. Two is in a wallet. Three would be through a fund. So let's talk about with a custodian first. This is how a lot of people invest in digital assets. A custodian is a third-party financial institution that holds the asset for you. So when you think of a custodian, think of your custodian that holds your Roth IRA, your taxable brokerage accounts, stocks, bonds, other types of investments. Banks can act as custodians. So a custodian typically is going to hold those assets for you. They're going to hold the stocks, the funds, the ETFs, the assets that you invest in. The custodian holds them, keeps them secure, manages the access, and that's generally what a custodian does. So in the world of digital assets or crypto, there are custodians that do the same thing. I'm going to avoid naming any because, again, I like to avoid any appearance of giving specific recommendations, even on custodians. So I'm not going to name them, but you know the big names. If you know anything about crypto, you've probably heard of the big names out there that let you invest in crypto. You've probably seen commercials for them. So these custodians let you buy and sell digital assets and store them in your account, similar to a brokerage account, just like you might set up a brokerage account and invest in stocks or bonds or funds. So some of the advantages of custodians are convenience and support. If you've got a custodian holding the assets, holding your crypto, for example, and you lose access or lose your password or need some sort of support, the custodian is there to provide that support. There's convenience there. That convenience is attractive to many people. The custodian does provide that level of support and convenience. So some would say there is also a disadvantage of using a custodian. One of those disadvantages is sometimes thought to be that it might be less secure. Now, it's only thought to be less secure because if it's stored in an account online, it is in theory susceptible to being hacked or to being compromised. This doesn't mean it's not secure. I'm not saying that holding your crypto at a custodian is not secure. I'm saying there are different levels of security, and whenever something is online and networked, there's always that theoretical risk that it could be compromised. I'm not saying it happens very often. I'm just saying that theoretical risk is there. There's another, I wouldn't say disadvantage, but sort of a downside some people perceive to be a downside is the connectedness to the financial system, the fact that it's still networked and connected to our global society as a whole. We'll get more into wallets here in just a second, but if it's networked and part of the financial system, some people have, personal reasons for not wanting to be part of an overall financial system. So, that's arguable as well. I'm going to stop and pause for a minute because Leslie has stopped by with a question. Leslie says, crypto seems to be an incredibly volatile space. How do you feel about investment in such a volatile thing in general? I know you frown upon individual stocks in most cases for this reason, largely. Great question, Leslie. I'm going to try to keep it contained because I want to avoid too much philosophical or thesis level discussion about this. How do I feel about investing it in general? I think it can make sense for some people. I'm not anti-crypto. I am crypto friendly in general. So I'm not saying that anyone in particular should or should not invest in crypto. It is historically fairly volatile, but there are use cases for everything. There are cases for investing in crypto. There are cases for investing in single stocks. It all depends on your personal situation. So it's really a non-answer, and I get that, but it has to be a non-answer because it's unique to every individual. So I am not against crypto. I'm not against single stocks. I'm very friendly to both. So I think it depends on a lot of factors in your situation. So great question. Thanks for posting that, Leslie. Appreciate it. All right. So next, let's talk about in a wallet. So there are ways to invest in crypto and hold crypto in what's called a wallet. There are hot wallets and cold wallets. There's different kinds of wallets. A hot wallet is a kind of a software-based wallet that is connected to another centralized system. Custodians often offer wallets that let you, trade and move crypto around. There's also what's called a cold wallet. A cold wallet is a disconnected device that lets you hold the asset on a device, on a drive, for example, using keys, and it's not networked to anything else. And it's called a cold wallet because it's called, or cold storage is sometimes what it's called, because it's not connected to the internet. It's not connected to any other system. It's completely self-contained and disconnected. It's air gapped from any other network source. So some of the advantages of a wallet, some would say there's a security advantage to wallets, privacy. the asset completely under your control. Those are some advantages some people perceive when it comes to wallets. Some people like the idea of having the privacy and the complete control under a wallet, more so with a cold wallet. A cold wallet really gives you the most complete control and privacy when it comes to holding your digital assets. The disadvantages of this method is that it's more complex. There is some technology to figure out. There's some tech barrier to it. Also requires never losing your keys. If you lose access to your cold wallet, you're kind of out of luck. There's no custodian there to support you and to help you recover. You're just kind of stuck. So there are some advantages from a security standpoint for wallets, especially cold wallets. But there's also some complexity that comes with it, some disadvantage in the form of complexity, technology to figure out, and really no support behind it. You're really pretty much on your own. So, third, let's talk about how to invest through a fund. So, there are funds out there. And again, I'm not going to name specific funds because that's too specific for a general conversation like this. But there are funds out there that track the price of crypto. There's actually one fund in particular that's a true ETF that doesn't hold crypto, but it does track. Um, it's involved it's aligned with Bitcoin, and then it tracks futures contracts in Bitcoin. So, but aside from that one ETF, that's not really a direct ETF. There are funds that track the price movement of digital assets. They hold the asset inside in their fund and in the trust rather, and then you're investing in the fund itself, but you're not directly holding the asset. So these do generally follow the price movements of the asset. I say generally because they don't really track it exactly. There's always a discount or a premium. You're not going to get perfection when it comes to price tracking. So the advantage of these funds are they're super convenient. You can basically allocate these funds in your Roth IRA or any of your account, and allocate them along with your other funds, and they just kind of sit there and rebalance with everything else, and it's super convenient. The security aspect is also appealing to many. You're kind of delegating and outsourcing the security to the fund itself, so you're not really worrying about keys or wallets or anything else. It's more the security is outsourced to the management of that fund. Ease of allocation, again, big advantage. You're just kind of putting in a slice of crypto exposure into your overall portfolio, and it's very convenient. So the convenience and the allocation is just really a kind of an upside. Disadvantages. One disadvantage is you don't hold the asset directly. It relies on third parties. Again, I don't know if that's a disadvantage or not to some people, but some people would see that as a disadvantage. Some people do have a preference to hold the asset directly for various reasons. In this scenario of using a fund, they would not hold the asset directly, and that would not achieve their goal of holding it directly. So it does rely on third parties. So another disadvantage again is the disparity between the actual price of the fund and the actual price of the asset. So you're always going to have a premium or discount. They're not going to track the price exactly, and if that's a concern, that would be a disadvantage. Now in the future, where a lot of people are hoping that we see a true, Bitcoin spot ETF, for example, that truly tracks the price, and other types of assets. That may or may not happen in the near future, but that's something to watch out for. So, what method is best for you? It really depends on what your priority is. So, you got to kind of look at your priorities and decide what makes sense for you. And again, I'm not saying you should or should not invest in digital assets in the first place. This is if you are interested and you do plan to invest, your priorities, I think, will dictate what methods are best for you. And you can do more than one. You can have, some digital assets using one method, and then some of the different methods, and kind of mix and match. But in general, what's your priority? So, if your priority is holding your asset away from government control of the financial system, you're probably going to want to look at wallets, especially cold wallets. I'm not saying that reasons for wanting to hold the asset away from control or away from the financial system are good or bad. I'm simply saying if that's a priority for you, if you like the idea of holding your crypto outside the financial system as a whole, outside government control, then the wallet is going to make the most sense. Again, especially a cold wallet is going to appeal to you most likely. Security. If security is of high importance to you, cold wallet or a fund, those are going to be probably your best bets. Cold wallets again are air gap. They're offline. They're not connected. Funds also really outsource security, and you're not at risk of having your crypto hacked in the traditional sense necessarily. If you have a belief that crypto is truly a currency, then wallets or custodians are probably going to make more sense to you because it lets you easily, buy and sell and move crypto and even use it to purchase things. A fund is not going to let you treat crypto like a currency. It's more like an asset you invest in, like gold or like stocks or bonds. But if you truly believe that crypto is a currency, then again, a wallet or custodian to have good liquidity and easy to move assets are going to make more sense for you. And again, some people believe that crypto is truly a currency or will become a currency. Some people don't and believe it's more like an asset like gold that will stick around for a long time or indefinitely as an asset class, but is never going to be used to, buy a car or buy pizza or buy groceries with. On that note, if you believe it's an asset class and has value and will provide positive returns over time, then any of these methods will work for you. But that includes funds as a possible method. So wallets, custodians, funds, all of them make sense for you. Funds, investing in using a fund really makes sense if you mainly believe that crypto is an asset class to invest in as for performance, for return, for overall long-term return. The fund can make a lot of sense. Also, wallets and custodians are fine because you're still holding the asset and the price movement is still something you get exposure to. So that's going to be helpful to kind of think through, if you truly believe it's an asset class versus a currency. So again, I would go back to what is your priority? What is most important to you when investing in crypto? And that will help dictate what method is most appropriate for you. So just to kind of recap, the three methods of investing we talked about today, with a custodian is one. Two is in a wallet, either a hot wallet or a cold wallet. A three through a fund, which is fairly indirect, but is still one method of getting price exposure. So those are three potential ways you could invest in crypto and hold some of these digital assets, or at least exposure to the performance and price of these digital assets. So again, not making a statement on the wisdom or the appropriateness, but really just laying out some of the how-tos and some of the methods of investing and the priorities behind it and how they align with your priorities and how it might make sense for you. So my hope is that's helpful for you to think through some of the options. And if you're newer to crypto, maybe this kind of outlines how some of these logistical methods work and the concepts behind them. And that may give you a starting point as well. So with that, I'll go ahead and wrap up there today, but a reminder for you, if you'd like to reach out and chat about any of this, you can reach out at my website, which is elevationfinancial.com. There's a button on the homepage that says book a complimentary money session. If you'd like to chat, you can use that to schedule a quick money session. Post your questions as you book, and we'll talk about whatever questions you have, and I'll be happy to give you any feedback that is valuable to you. So with that, thanks for joining me today. As always, have a great day. See you next time.